Monday, everyone, and Bitcoin has been on an absolute tear since Friday. So, when we were checking in last Friday afternoon, we were looking at prices to come down, test these support levels, and then move up to complete this imbalance, or fall through and to test these lower wicks. We clearly got nowhere near that. There was enough buying pressure that had us buying through here. Take this liquidity wick as a buy level, and it carried it all the way up. It filled this imbalance, and we have just currently filled the imbalance created back here in July, which we didn't even have written up. So we've got from that wick to that wick, all the way out. Nope, wrong one. Imbalance. And we have just absolutely smashed through that, which is pretty amazing. So as a few things occurred during the weekend, so we already saw the impulse up. So we came down, we rejected off those that high, which filled the imbalance by about 50%. We gathered support, we grabbed liquidity from this level here at 56,900. As we came up, we filled a short imbalance here, fell down. There was no real imbalance or liquidity point that I saw here. We came up, we consolidated on Sunday, 8 o'clock Australian time, Brisbane time, is when the report that Donald Trump got shot. But we could already see that the market had priced in the moves up. But as we can see, from there, it's just rocketed. Now, the market opened for the start of the week here, and it is just pricing in this absolute bull tear of a day. And so who knows how far up we're going to go. But if we're to look at this on a slightly longer chart, so let's just get rid of the candle. What we can always see is when there's a fast down, there's a fast up, there's a fast down. Now we're about to have the fast up, which is going to fill all these imbalances. And we'll go back through and we'll check these because the liquidity wicks, where it blows through and forms an imbalance in the wick as it passes through the the liquidity wick, is when we're looking for it to turn around and grab support, or if it falls through with an imbalance candle, which is a long range candle which each wick on either side doesn't touch, we're looking at that as an imbalance support or resistance. So let's just delete that. We'll go back down to our 1 hour. So I am anticipating that this will come back into here because we've got an impulse wick here. This is definitely an impulse. This Monday is definitely going to come back and retest these levels of this imbalance. So as I was saying about the liquidity grab, the liquidity wicks, so these were the liquidity levels around the 60,780, where price shot through with this wick, with this candle, closed above, came back down, retested above, and then started to move away again. So this was an area where it flipped from a resistance to a level of support. And so from there, we now have this as a significant level as a liquidity grab. because this was an area of resistance, but now flipped into support. And it's kind of like, imagine when someone they've got an order to short from this wick here. So let's say they were short from this level and their stop loss was here. And as price came down, bounced down, bounced down, bounced down, and it starts to move up, and all of a sudden they've gone from being short to stopped out. Quite often they will flip their order from short to long. And so now everyone, or a lot of orders, have gone from like, oh, we're stopped out. They're going to flip. They go from a short bias to a long bias. Prices will probably come up, hit here, only to flip again. To come down and sweep the liquidity at this level, which will stop out all these long orders. And that is how the market moves. So now we've got these 2 wicks have been broken through. I wonder if there's a better color. So those 2 wicks have been flipped. So now they're going to be used as a level of support. But we also have to make the note where fast moves up equal fast moves down. And so if we just keep that as a little reminder, so when we go, yep, this thing is absolutely going up, it's not. It will probably come and retest this, and then probably fall back down to this level, because it needs to fill these imbalances. This imbalance isn't confirmed yet, so we can't take that. We can only take that on immediate value. Here we have an imbalance. And so below that imbalance, this imbalance is now filled. And we've got levels below here which are going to be areas of support. So let's stretch this out and we'll work through this area on where we may find areas of liquidity wicks. So we've got 59,895. We got 59,475. 59,272. And we've got one here at 58,289. Alright, so that's really good. So this week has obviously mitigated orders that were in here. as well as filling an imbalance, or the majority of an imbalance in here, to at least 50%. So there's still a little bit of it for it to go there. That is mitigated. This was one where it came up, tested, found support on it, and then took off. But once it finds support, then it starts to move and leave its leftover orders moving forward. So that is something to bear in mind. Obviously, we can never pick anything 100%, nor can we pick the direction of the market. Just like last Friday, which would have been an absolute fantastic opportunity had we gotten in, but we were waiting for lower prices to get in. That just never occurred, and that's alright. That's just the way things go, because that was, where were we, 2 o'clock. Yeah, 2 o'clock was this week. At the buy, we were at our purchase price, at a liquidity wick, but I was anticipating this lower price, and so I stayed out of the market. Which was a miss of 9.82%. The truth is that doesn't matter, because what you were never in for was never your trade, and that is the way things go. Alright, so looking at this now, we've got excuse me. I think I got rid of a wick over here that should not have been gotten rid of. Yes, there we go. So that, and that way, perfect. So these are real areas. These are areas that add additional confluence, because we always know that imbalances get filled. Because an imbalance is, there's an absence of orders in there, an absence of orders filled because too many buyers were in the market, and so while everyone was trying to buy, people were putting in their orders. So they were all putting their orders in, and the price moved away, and they weren't actually able to get those orders filled. And so people have still got those prices placed in, and so while this liquidity order wipes out stop losses, there's a whole heap of buy orders placed in this zone that are not yet filled. So while there wasn't a lot of volume traded, there is definitely a lot of orders, and it kind of falls through, but it will eventually find support at the wicks. So let's just look at this. So we are still looking at, for here, where it will find resistance. So we're also at the 50% level. If we can go back to a 4-hour chart, so this impulse down to retrace back 50% is this level here, which is where we're about to touch. So if we stay below this 50% level, this is still a downtrend. If we go up and we break above and we can hold, this 50% level converts to a level of resistance. So this is just a mental move. So the whole move down was 50%, moves up. If it breaks through and closes below, it still shows weakness. If it breaks through and finds support above, i.e. these areas up here, then this shows us that there is a strong area. This is around the area of between 64,000 and the 50% level is 62,630. So if we can find an area of, if we can break above this area, if we can break above this purple area, then that gives us bias that we are going to go longer. We are going to be in a bullish case. If we find resistance and we start to fall below, then we may just have this lackluster move to the upside, and we are down for another couple of weeks to a couple of weeks down here, just mitigating these orders, just liquidating these lower prices. So yeah, with this impulse, we just got to bear in mind, fast moved up, fast moved down, but it was almost like, I just want to make another point, it was almost like the market was already pricing in the move to the upside, and the Donald Trump attempted assassination really was an excuse, but it was already going to happen. Like, it was already priced in. It just happened that, oh, that was the catalyst, let's make a jump. And with that being said, I hope everyone has got their buy orders set in, the areas that they want to look at, and their areas for take profit. I certainly wouldn't be buying in this at this point. Never buy at the top of a wick, because there's always someone who bought down here who's ready to sell at the top. Yes, it might just keep going higher, but it doesn't, because the market ebbs and flows. We go from higher high to lower low, to lower high, to lower low, to lower high, back to a higher high, to a lower low, to a lower high, to a higher low, higher high, higher low, higher high. Will we come in for a higher low, or are we just going to collapse down to a lower low? I'm thinking we're going to go for a higher low before taking out this, at least, at the very least. Before we take out this 64,000, we're going to have to put in a higher low, and perhaps we might have a lower high here, which will just shake out some buyers as we move back down to mitigate a little bit more and just flush out just a few more orders in that market. With that being said, thanks for tuning in, happy trading, and we'll see you tomorrow. Bye.